Alrighty, hey guys, Lori Amos here, RE/MAX Professionals Carter-Geer team.
Hey everyone, Jorge Montoya, Guild Mortgage.
So we are going to be doing our November market update video, real estate info with Lolo. And Jorge, we need a name to like bring you into the whole rhyming situation there. Anyhow, so a couple of things, we're going to kind of switch it up a little bit this month. I really want to talk about the down payment assistance. So anybody that's on my Facebook page or watches my personal page knows that this is something that I really promote. Obviously, this isn't something that I do personally. It's just a program that I'm aware of, that I'm certified in at least one of them, Home at Last, and obviously Guild Mortgage supports these programs too. So we've talked about the down payment assistance a lot, but we haven't really talked a whole lot about what exactly that entails. So give us a rundown.
Sure. So let's talk about just some basics, right? Who's eligible, who is not eligible. One of the biggest misconceptions is that it's not a first-time home buyer benefit.
Correct.
A lot of people think that this has to be your first home, and no. You could already own a home and get this as long as you're going to occupy this as your primary residence.
And also that I've heard a lot of people say that they think that it's only rural Nevada.
Yes, correct.
Not true.
And it used to be that way, but now you can use it in the entire state of Nevada with the exception of Las Vegas. But you could use it everywhere else, and in our area, Washoe County, Reno, Sparks, surrounding areas.
Carson, Fernley,
absolutely. So you're not limited to just the rural area, which is phenomenal.
Right, absolutely.
Absolutely.
So now, recently, I had someone express some concerns about the fact that there is a difference in the interest rate that you're going to pay if you have the down payment assistance utilized with your purchase of your home. So let's talk a little bit about that.
Absolutely. So there's definitely differences when it comes to interest rates. I'll start with this analogy, which you and I were talking about.
Yes.
The first car loan I ever got, I was like 18 or 19 years old, and my interest rate was like 19%.
Oh yeah.
Holy smokes, that sucks.
That's crazy.
That was not good. And now the most recent car loan that I got was like 2.9%. Right? Way big difference.
Oh, right.
The crazy thing is that sometimes we get so caught up in the interest rate that we forget. As consumers, many times we buy this vehicle, and I was willing to pay 19% for a depreciating asset. Not even an asset, it's a vehicle.
Oh, you drive it off the lot, and you're
absolutely
valued.
But I was cool paying 19%.
Right.
So the reason I mention that is because when it comes to housing, sometimes people panic. They hear that the market rate, let's say, was 4.5%, and then the down payment assistance is 5%, and they're like, "Oh my God, this is a ripoff! It's horrible."
Right.
And that couldn't be further from the truth, because you're paying a little bit of a higher interest rate because you're getting government help, but it's on an asset. It's something that has the ability to appreciate. So it just kind of blows my mind that we're willing to pay 19% on a car, which no way will that ever go up in value.
Right.
But then a home, you're paying a little bit more in interest, but you have the home that will generate a future savings.
Absolutely, yeah. So I mean, the way that I look at it is down payment assistance obviously is not for everybody.
Absolutely.
However, I have seen it make the difference for a lot of people who don't have that disposable income within their budget to save $200 a month or $600 a month or whatever that may be. Like, let's just say that your total out of pocket is $6,000 and the only thing that you can save per month is $200 or $300. How long is it going to take you to get to that point? And in that time frame, whether it's 2 years or 3 years or however long it takes you to save that amount of money, you're still paying rent.
Absolutely.
So I guess each person has to determine in their situation what works best for them. Now let's just say that you hear all the facts and you know all of the numbers and all of that, and you still are just not really feeling the whole down payment assistance program. That's okay, because there is another option.
There is another option. Tell them what we've got, Vanna White.
This is all you.
Oh yeah, me. So there is a secondary option, right? If you don't want the down payment assistance, there is the 1% Guild Mortgage program. 1% down. That is also a great solution, and I'm really glad that you said that down payment assistance is not for everybody.
Correct.
For someone that's got their own down payment available, that's probably not the solution we're going to suggest, because it's just not going to be to your benefit.
Right.
But if we don't have as much money available, then these programs become great, just like the 1% down payment grant.
Absolutely.
And that program is a conventional loan, and it is also not limited to any specific area. So as long as you meet the income requirements and credit credit score requirement, you can also get this 1% down program as well.
So the thing with that is, with the down payment assistance program, if the score, because there's 2 different score requirements for the DPA as opposed to the conventional 1% with guild, correct?
Correct.
So 640 and
640 and 680.
Perfect. Okay.
And 680 is not perfect. 680 is just like okay.
Right. Absolutely. So, in again that scenario where you don't have any money saved, you don't have the disposable income within your budget to save that amount of money in any reasonable amount of time, but you don't want to do the DPA anyway, you want to go with the 1% conventional, again, there's resources out there. Angie Salcido at Epic Credit, who I work with very closely, hand in hand, very often, she does phenomenal work. She does great work. She's helped a lot of people improve on their credit score in a lot less time, I think, than most people realize is going to take. And so if you're just one of those folks that's just not feeling the down payment assistance, get with Angie Salcido. At minimum, do a free credit consultation with her, see where you stand, see what she can do for you and in what amount of time. If you're really, really just adamant on not using that DPA, cool. Talk to Angie, bring up that score 40 points and go with the 1% option. So basically, moral of the story is there's tons of resources out there. There's tons of options for everybody. Everybody's preferences, whether they be personal or financial or whatever the reason may be, there's going to be a solution for you in some way or another. It's just about reaching out and letting people like Jorge and I explain to you, these are the different options that you have. What do you feel is going to be best for you and your situation? So
absolutely, and that's the beauty of getting approved, right? When we approve you, we're not just going to tell you one avenue of approval.
Oh, absolutely.
We're going to see which programs you qualify for, and then we can compare apples to apples, so that way you and your family can determine which program is a better fit for you.
We actually did just recently had a client that came in. Him and his fiance sat down with Kristen, and she laid out, I want to say 4 or 5 options for them. There's FHA, there's FHA with DPA, there's USDA. I mean, all of these different options that she gave to these folks. And they had been to a couple of lenders prior and were just kind of feeling frustrated, like they weren't happy with what they were getting. When they left that appointment, it made all the difference in the world. So ask the question. So all right, so this is my little bomb for you, Jorge.
Here it comes.
I know that he's not expecting this. So I was getting ready for work this morning. I was thinking about my calendar and what's upcoming, and I got the invitation that you sent me about the Friday thing.
The Give Back Fridays.
The Give Back Fridays, which you wanted to implement right away, but it wasn't available for us to start actually doing until January, correct? Okay, right. So I'm on this idea of giving back to the community, etc. Normally when we do these videos, we do them at a restaurant, we feature a local business, a coffee shop, something to that effect, and we give away a gift card to kind of promote that business. You know, I'm big on Reno and you're big on locals, and so anyhow, this is my idea. It's November, right? It's Thanksgiving month. So I want to offer to sponsor a family in need in our area and give them, say, like $100 gift card or maybe a $200 gift card for a grocery store to help them with the meal for Thanksgiving. So that's my bomb.
That's a great bomb.
I like it. Are you in?
Boom. 100% in.
Okay, cool. All right. So we'll have to decide on a grocery store. So basically what we're going to do is the same concept. Like and share. The difference on this one is I want you to comment in the comment section. If you want the person to be anonymous, you know, not everybody wants people to know they're maybe having a little bit of struggle, you know, so forth. So you can comment the person that you want to nominate, or you can put yourself, and that way when we call and we do the drawing to see who wins, then it could be kind of off of Facebook and off of public, and then you could tell us, hey, you know what, I want you to send it to this person or send it to that person or whatever. So that was my idea for Thanksgiving. I think that that's a cool little way to give back. So
absolutely, it's important to give back to the community that helps us, right?
Absolutely.
So I like the bomb. High five there. Boom.
All right, guys. Well, that wraps it up. So that was your November market update report, and we'll see you next month.
See you guys soon.